Is the Reserve Bank governor a fibber or a Seinfeld fan? Whatever happened to that scary bond market that was spooking the stock market? And Paul wants to talk about a boring subject called pearls. Let him, he's a part of the team. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Okay, I don't like calling the Reserve Bank governor a liar.
That's a pretty rough term. Yeah. Open the you have a go at me, and then you go into the Reserve Bank governor and call him a fibber.
I like Dr. Phil. Fibber's better than a liar, but I think he's a George Costanza fan from Seinfeld.
You need to explain.
Okay, he said that that basically yesterday at the Reserve Bank meeting, he basically said interest rates won't rise to 2024. Now, I just think he's using the George Costanza line that it's not a lie if you believe it. And I think he's believing that right now.
Well, he certainly wants us to believe it, Peter. That's the main part of the story.
Which is great for the economy. Everyone's going to be positive.
Which means that, 0.1 is going to be their rate for 3-year bonds. 0.1 is the cash rate. And it means that mortgage rates are going to stay at record low levels.
It's got to be great for confidence.
And that housing boom just continues,
right? Keeping on.
So you talk about now. People are now. I think we're back to after dinner conversations. Not quite, but the housing market is going to roar. Right? We haven't seen the end of that. It's got more to go, Peter.
Yeah, and I think the bottom line is this: when it comes to the Reserve Bank and Treasury, they have base cases and they have optimistic cases. Phil is taking the base case. And if the base case works out to be wrong and it's optimistic, one day he's going to have to say, look, ladies and gentlemen, I am going to have to raise the cash rate. It will affect home loan interest rates. But when I've promised that years ago, I really meant it. I really believe it. But now responsibility says I have to break my promise.
And the key thing he's looking at is wages growth. That's what this is all about. He wants to see wages growth back up to 3 to 4%. He thinks that's the only way you're going to get inflation. That's his view.
He's doing
Not quite sure I agree, but look, let's take him on his word.
Yeah.
He believes it. He wants you to believe it. Yeah. Fixed rate into mortgages are record lows, and get used to term deposit rates. Commonwealth Bank paying 0.08%. That's right, 0.08% for 3 months.
And let me stretch out my Seinfeld analogy. Of course, if house prices go through the roof, the APRA will get asked by the Reserve Bank to tell the banks to stop lending as much. You'd be like the soup Nazi.
Yep.
No more loans for you.
Yep.
Okay.
Anyhow.
Where's the bell guys?
They're asleep here.
Number two. We're talking about...
We're struggling to remember what number 2 is. I know what number 3 is because you told me I was going to be boring.
And
we're going to get to that, folks.
And this is another boring subject we will make interesting. The bond market. The bond market was spooking the stock market last week, and all of a sudden stocks going up big time. Whatever happened to the spooky bond market?
Well, spooky bond market got ahead of itself, Pete. I mean, look, it'll come back. I mean, look, bonds are important. The bond market, I used to be a bond trader. They're a lot smarter than these equity guys. They think they are. They're looking years ahead and saying inflation is going to come, and it will, folks.
It will.
But the market's got a bit ahead of itself. We've seen the retracement back in the US. We've seen in Australia the Reserve Bank make big purchases, which drove rates back down again. Yeah. I think in the US we're just going for a bit of a breather. So the key note here is I think we're going to get the trend of a steepening yield curve. That is where the short rates stay really low and the long rates go up high. That will come back to that, and bonds will come back into the news. But we're out of that. It also was... I think the other factor people forget is with the end of month. And we've seen in the bull market in the US, the last day of the month, Wall Street sells off, right?
Take profit.
And the start of the month, they buy. It happened again this month, folks, so let's not get too surprised about that.
And also, Paul, we should make the point, there's another line out there, don't fight the Fed. And the Fed is doing like the local Reserve Bank is doing.
Yep.
If the market gets ahead and interest rates go up, they go and buy more bonds and they push those rates down. They want to keep the rates down until we have economic boom time right across the world.
The roaring 20s.
The roaring
back
20s.
Back to the races. Is that right? Or back to something?
Okay, there's a bell. All right, last one. Now this is, it's a boring subject, but Paul will make this interesting. Pearls. What are pearls?
Well, they're a capital note issue from the Commonwealth Bank. This is Pearls issue number 13.
Gee, lucky number 13.
Opens on Thursday paying a fixed rate of 2.75%. So that means that you'll get effectively the 90-day bank bill rate, which is about zero.
Yeah, 0.1, isn't it?
Or not even 0.1, 0.03 or
Is
something.
it really?
Plus the 2.75% as a fixed rate. That'll float. In other words, every 90 days that'll change. But Dr. Phil has
Go
told
up
us
and go down?
go up and go down.
They can't go down below 2.75.
Well, unless Dr. Phil
can they?
lets rates go negative.
That's true,
He has
yeah.
told us they're not going negative.
And he's not a fibber.
And he's not a fibber. And he's also told us they're not going up for 4 years.
Yeah,
So
and he's not a fibber.
So effectively a gross distribution of 2.75%. Now, look, a lot more risk, but compared to a term deposit of 0.08%, that's pretty attractive. This thing won't hang around. If you get a chance to offer from your broker or you're a CBA shareholder and you've got a bit of cash lying around, go for it. This issue's going to close early.
But this is not advice, Paul. This is just brilliant financial education.
Brilliant financial education. Is going to be huge demand for this simply because there's nothing else for those, less defensive investors to look at with term deposit and bank rates just so low.
Okay, well, I'm Peter Switzer.
I hope that wasn't so boring, folks, but you know who to write to?
It was boring, but we gave him a chance. I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.
Shh.